Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. Happy Hump Day. How's it going?
Yeah, as good as Wednesday can go.
Always, yeah, as good as it can go. We see Bitcoin going up today. Trade blocks indexes are now the CoinDesk indexes. Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index right now is trading at 55,217. Bitcoin is up about 0.5% over the past 24 hours, and the CoinDesk Ether price ETX index right now at 27.23. ETH is having a great run, hitting all-time highs just hours ago. It's up about 6.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, ETH all-time high. We're also seeing DeFi locked value is also hitting records.
It's like $63 billion in total. That's the highest it's ever been. People view ETH as a proxy for DeFi. It's one of the reasons why it's at an all-time high. There's just general positiveness around some of the innovations that are going to be happening, like proof of stake happening in ETH in the coming weeks, months, and years. But otherwise it's been a ho-hum day. You look at the CoinDesk 20, you have some that are up 5%, some that are down 5%. In stocks, that would be a big move, but in crypto, meh. ETH, however, as you said, is close to 7%. So, hey, that's pretty good for those ETH holders.
Pretty good. Emily, Goldman is also tracking 19 blockchain stocks that are outperforming the S&P 500. What do we know from that?
Yeah, it's just an interesting data point. So Goldman Sachs found that on average, stocks that are exposed to blockchain and cryptocurrencies were outperforming the S&P 500. Now, to be clear, these are stocks that are exposed to blockchain and cryptocurrencies, not other cryptocurrencies. So they're talking about like Riot and MicroStrategy and even traditional financial players like JP Morgan and Visa. But interestingly, even though these on average outperform the S&P 500, they still lagged behind Bitcoin itself, which is kind of, on a rocket. So.
Yeah, which is why perhaps we're learning this morning that gaming firm Nexon is buying $100 million worth of Bitcoin. It's the first major Japanese and South Korean firm to put BTC on the balance sheet. But turning to our first guest, so Genesis, an institutional digital asset services platform that offers everything from crypto lending, trading, and brokerage services, they're releasing their first quarter market observations. Among the highlights include originating $20 billion worth of new loans compared to about $8 billion in the last quarter, as well as facilitating $31.5 billion in spot trading volume. Note to viewers, Genesis is the sister company of CoinDesk. And joining us now is Michael Moro, CEO of Genesis. Welcome this morning, Michael.
Good morning. Thanks for having me.
Great having you on. All right, so before we get into Genesis, I'd like to get your initial insights on Bitcoin and where you think the crypto markets are headed in the near and long term.
Do you want a longer answer than just higher?
Do you have a price target?
No, I don't have a price target, and I hope that that's actually not a real question because I'm terrible at this game. But for a firm like Genesis, who's been doing this since 2013, and us kind of pushing the Bitcoin narrative was really the only thing that existed for so long until, Ethereum kind of came around. And for us, the wave of sort of institutional adoption, I think it's sort of been the, sort of a concept that was kind of just talked about. We were kind of pushing the narrative, but now I think it's sort of undeniable. And to be at a point in time in the adoption cycle where some of the biggest banks in the world are now kind of coming up with plans every single day to launch some product or service kind of related to cryptocurrency is extremely exciting. And the fact that JP Morgan is somehow now in the Bitcoin exposed or crypto exposed stock is just mind blowing to me to kind of talk about how far we've really come.
Well, you're seeing an explosion of activity on your platform as the price of Bitcoin rises. So what do you find most notable in terms of where this interest is coming from and where it's headed?
I think it's a couple different things. As you mentioned, we have several business lines, and we can touch on each of them a little bit. But for trading, we've really kind of been focused on kind of the hedge funds and family offices, market makers, for a long time. And then, we saw the corporate narrative, the buying Bitcoin with treasury assets really kind of take hold, and in 2020, and we saw the MicroStrategies and the Teslas and the Squares of the world. And as I think that was started to pick up, we started to field a lot of phone calls from corporations trying to do the same. And so from a trend perspective, and we kind of discussed this within our report, we basically went from zero in kind of corporate buying all the way up to, north of 25%, right, of our volume that we did in Q1 was with corporate customers. And so, it's too early to say this is a trend, right, because it's relatively kind of new and we're just kind of collecting data. But that's really been sort of an interesting data point for us, Michael, on the stock trading side.
Who are these companies that are using your treasury services? What kind of companies are they? And are they buying puts? How many of them are buying puts, let's say, to hedge their position? It seems rather speculative on their part now to put it in if they're not necessarily in this business.
What's funny is, we focused a lot on obviously kind of the U.S. Sort of domestic companies. But we've really kind of seen interest from international clients as well. We've done the treasury services for Latin American clients. We've done the same for Southeast Asia clients. And what's also been interesting for us is there are companies that are in the buy and hold camp, right? Guys that are sort of allocating 1%, 5%, 10% of their kind of corporate treasury cash and cash equivalents to Bitcoin. As a hedge against inflation, especially, sort of abroad where inflation rates can run much, much hotter in the 20 to 30% or even north of that in some countries. There's also been some companies that are now trying to trade crypto.
What kind of companies, though?
I'm sorry?
What kind of companies are these? What
these
sort
are
of
mostly
companies
in the
are
tech
they?
sector. Kind of similar to, the Squares, the Teslas. They have a tech bent. They may not necessarily sort of a payments company, but a lot of them have like a software background or an e-commerce background and have some sort of element of kind of technology. Can
you name names?
No, I wish I could. It'll make the reports a lot more interesting, I think, when I can talk about them. But ultimately, I'm sorry?
Yeah, they're not financial institutions, let's say, or they're not in the manufacturing business or some of the older type of businesses, but they're primarily people who are already tech or companies that are already tech focused, correct?
Yes, that's correct. Although there are some companies that have been around for decades, but they have, in the last 5 to 10 years, obviously kind of had to adopt a lot of technology kind of into their products and services. And so, I would probably categorize them today as within kind of that tech vertical.
Are they doing though? Are they hedging? Like what exactly is their reason for doing it? Is it just they've bought into the Bitcoin narrative, or is it because of a specific thing involving their portfolio?
I think it's most so they are, to answer your question, using options and hedging and as well as kind of doing call overwriting or covered calls. You will see them play other options like puts instruments to kind of limit risk at times. But for most of them, the 1% to 5%. Is really kind of not worth hedging from a price perspective. And they're just kind of doing it as a diversification play. I think as kind of Bitcoin becomes an investable and frankly acceptable asset to have on your corporate treasury balance sheet.
Good morning. Could you break down a little bit the crypto lending model? Because I don't think people generally understand it. So, first of all, just most simply, how does it work? And what are the benefits of it over just kind of more traditional lending models? And why is it booming right now? aside from just the general booming market?
Sure. So lending was a business we started about 3 years ago. And up until that point in time, people sort of bought Bitcoin and just like kept it in their wallets, right? It was not a useful asset beyond that because it had no interest or dividends or anything like that. There was no services to kind of provide that. So what we did was we started to say, what if we were able to borrow that crypto, Bitcoin and Ether and Litecoin and some of the other ones at the time, and said, okay, we'll pay you interest on the loans that you make to Genesis. On the other hand, the 2017 bull market, while it was really like retail driven, I think really introduced more institutional investors and trading firms and hedge funds kind of into the space that started coming to us and said, hey, we'd love to get a working capital borrow in Bitcoin or any of the other kind of cryptos, and said, we have, we're a market making firm. We have to pre-fund exchanges. Can you give us a bunch of Bitcoin so we can, trade and arbitrage across a bunch of different venues, or for working capital reasons for trade settlements with OTC desks. And on the other hand, we saw a lot of demand for US dollars. That was later in 2018 when we had a lot of people that were long Bitcoin, that had kind of bought a lot in the bear market. It's kind of the price was kind of coming down, and they said, I'd love to go levered long. Can I, without selling my Bitcoin and incurring, the taxes and whatnot, and give up the upside, frankly, is there a way for me to kind of monetize a portion of my Bitcoin holdings or my other crypto holdings and get US dollars on it? So that was really sort of a turning point already. It was only like 6 months into the business, but the rapid growth for that. And frankly, there's not really a lot you can do with your Bitcoin today. You can't kind of walk into a bank and get a loan against it. You could walk in with $100 million worth of Bitcoin. There's not a single bank that will even give you $1, right, against your $100 million position. So for us, I think it was an opportunity to kind of introduce capital into the system. And said, okay, there is a way Bitcoin is useful. And for the institutionalization of the asset class, you have to have a way for like a repo or reverse repo markets you have in kind of established markets and kind of bring that to the cryptocurrency space. And that's what we have today. With our $9 billion of loans outstanding that we had kind of at the end of March. And, $2 billion of that is US dollars. But we always kind of get caught in the interest rate narrative. Why is kind of US dollars rates in crypto, in the mid-teens? And that's really like a function of demand and supply. And you have this environment where the traditional lenders, kind of the biggest banks, are not lending, to crypto firms and into the crypto space. And so there's a premium for capital, especially in the form of loans today in the market as it exists. And maybe that'll change, maybe it won't. But that's kind of the market dynamics as it exists today.
Thank you. I think that was probably the clearest explanation of crypto lending I've ever heard. So thank you. Just one quick follow-up. My understanding is that in the crypto lending world, DeFi lending is booming more than Bitcoin itself. Can you just explain what the reason is for that?
Sure. So for one, our loan mix changed significantly from Q4 to Q1, as we kind of detail in our report, where Bitcoin used to be more than half of our crypto loan portfolio, and it was down to like 42%, I think, at the end of Q1. And a part of that, I think, is the world waking up to the ability to lend your Bitcoin. So a supply-demand dynamic that said, hey, it's really kind of like supply constrained in dollars, as I was talking about, is actually more like demand constrained in Bitcoin today, as there's more availability for Bitcoin to kind of get a borrow. So the interest rates have fallen significantly. And number two, kind of where in a bull regime, in a bullish market like we have today, there's really no reason to like short Bitcoin or to kind of get a borrow in Bitcoin as much as when we're in a bear environment. At the same time, Emily, to your point around like DeFi, I think a lot of the DeFi protocols running off of Ethereum and kind of the explosion that we saw. You guys were talking about like the total value locked in DeFi markets. I think because there's a lot more things you kind of do with Ethereum today, we've seen a huge explosion in kind of interest of kind of borrowing ETH from a centralized platform like Genesis, and then kind of deploying that into the DeFi protocol to kind of arbitrage away and take advantage of price discrepancies that kind of exist in both areas.
Could be also a reason why we're seeing ETH at all-time highs. Michael, thank you so much for your views on the crypto markets as well as breaking down crypto lending to us.
Happy to be there. Thank you for having me.
Thank you.
All right, that was Genesis CEO Michael Moro. Coming up, Senator Cynthia Lummis on getting DC policymakers on board with digital and innovation.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The U.S. Senate Banking Committee is considering a bill that would create a digital asset working group to ensure collaboration between regulators and the private sector in order to foster innovation. Joining us now to discuss is one of the members of the Senate committee, Wyoming Senator Cynthia Lummis. Welcome, Senator. So this bill has already been passed by the U.S. House of Representatives and had bipartisan support. So tell us a bit about the legislation, how you think it will be received by the U.S. Senate and its status.
Well, I have a lot of confidence in Patrick McHenry and Stephen Lynch, the sponsors of the House bill. That was a bipartisan effort that I'm looking forward to sharing with other senators. So we've been visiting with their offices about how it was received in the House, what the debate was about, what they hope to achieve. And so I'm looking forward to reviewing the bill and working with Senate Banking Committee members to consider it as soon as possible.
Senator Lummis, of course, crypto, it's been on a tear because of the spending that's going on in the U.S. President Biden tonight is going to go to your workplace, and he's going to ask for another $3.5 trillion to spend. There isn't enough of a stop in the Senate. There's no general check there from the GOP. Instead, the GOP is actually proposing its own spending bill of $500 billion. Why are Republicans walking away from limited government? Why is Keynes replacing Friedman for the GOP?
That's an interesting question. We saw during the last 4 years a lot of spending that was supported by Republicans. And I think we had a White House that wasn't terribly committed to states' rights and to spending that is reasonable and that wouldn't run up the national debt. And then we had COVID, so there was no runway left to control spending, and we had to spend in order to get our economy through that terrible dip. So now we find ourselves $27 trillion in debt. We are debasing the U.S. dollar and now doubling down that the Biden administration is on board and working to increase spending even more.
The economy seems to be turning around, though, as we speak. We're seeing, for instance, flights that are being booked solid in many cases. People are starting to plan for the future for a revived economy. How come the message isn't going through? Why has the GOP failed to get the message out to the public? It seems like these things are polling well, even with Republican voters. How come the message of fiscal responsibility is not connecting with Republicans the way it used to? Is there a message problem in the Senate, in the Republican leadership itself, and must it change?
It must change. We have to do a better job of restoring fiscal sanity because we're debasing the U.S. dollar. What that does, however, for Bitcoin is makes it a very attractive alternative that should be part of people's investment portfolios. So that's why it's really important that we have innovation centers as we do now at the FDIC. We're going to have someone who understands financial innovations at the SEC. And I believe that we are starting to see people in the administration understanding the importance of financial technology. And you're starting to see it in Congress, evidenced by the bill that just passed the House.
Good morning, Senator Lummis. So recently there has been this, well, this has been going on for a while, but there's recently seems to be an increase in rumors that the U.S. government is going to somehow crack down on Bitcoin, or that we're going to see government regulation. Some, these are circulating on Twitter. Sometimes they might even affect the price. Is there any reason for concern of some kind of U.S. regulatory action that might have an impact on the price of Bitcoin, or is this just sort of irrational, unfounded fears?
Well, I haven't seen anything to indicate that that's a rational concern. We've been meeting with federal regulators that have a role in financial technology and digital assets, and we think that they're taking a go slow approach. We think they recognize that innovation in financial technology and digital assets is more apt to occur in an atmosphere that allows for it to be very creative, but at the same time that we need to have a chessboard that people understand, a base of law and regulation that makes it clear what the regulatory approach is going to be. So, and we're trying to invent this bicycle while we're riding it. So it's a challenging time for regulators, for members of Congress, but so far I'm pretty positive about what I see in that space. And so I would encourage people, like your last speaker, Michael, to just keep innovating in that space. He mentioned that lending in Bitcoin is something that is just starting to develop some legs, and we want to see things like that develop some legs by the people who understand how to make it work, not coming from the regulators and the legislators first. Let the private sector innovate. Let's get their ideas about what the appropriate level playing field or chessboard is in this space, and then move on from there. So I like this kind of go slow, watch the innovators, see what they're doing, don't get in their way, but help them find a solid foundation.
Do you feel with this working? Do you feel with this working digital asset group from this legislation, do you feel that that might accomplish, more innovation or do lawmakers in Washington, D.C. still lack the education to really understand how this technology can really progress and create a better future for the United States?
Yeah, it's very clear to me that lawmakers do still lack an understanding. And so you're not going to see the innovative regulatory environment come from the regulators or from the Congress. That's why Senator Kyrsten Sinema and I have created a financial innovation caucus in the Senate. The specific purpose of that is to educate members of the Senate and their staff about the qualities of Bitcoin and other digital assets, to help understand the benefits of digitizing the U.S. dollar at a time when, of course, the yuan is being digitized, and how that helps our competitive stature all over the world. We want to have those discussions in a setting that is purely educational. And we want to have it with the regulators. We want to have it with the innovators. So we understand from them what they're doing and how we can help make a framework, but stay out of their way, let them innovate.
All right, Senator Lummis, thank you so much for joining us this morning. Appreciate your insights.
You're welcome.
Right, that was Wyoming Senator Cynthia Lummis. Coming up, decentralized finance markets update with DeFi protocol MakerDAO and an update from CoinDesk's Nick Day on all things global policy and regulation.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
All right, time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 28th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. Nexon, the Japan-based online gaming giant, is sinking its teeth into over 1,700 Bitcoin. That's about $100 million worth. It's the largest ever crypto purchase from a firm listed on the Tokyo Stock Exchange. In a statement, the company, which is known for its virtual world, says the virtual currency offers, quote, long-term stability and liquidity while maintaining the value of our cash for future investments, unquote. Though we've seen other tech companies like Tesla and Meitu in China move cash to crypto, Andrew Sullivan of AsianMarketSense.com says this could be just the beginning and expects to see more traditional companies following suit.
Yeah, they're looking to avoid currency devaluation, and they're looking for something, some other means to balance their portfolio. Historically, probably people would have used gold for that, and they're making the analogy that realistically Bitcoin is rather like a virtual gold.
Meanwhile, over in China, there are just days remaining until all crypto miners will be forced out of Inner Mongolia. Now, Beijing blames the miners for being too power-hungry and over-reliant on highly polluting coal plants. Some provinces in China, however, are welcoming crypto miners. In Sichuan, renewable hydropower is being marketed for their use, but that may be a little too late. Miners we spoke with say they believe factors like drought and floods will affect a stable electricity supply, and that they want larger locations for more long-term operations. Bitdeer, a Chinese crypto mining firm, has already moved some of its firms to Norway and the U.S. Wang Wenguang, head of mining operations for the company, tells us that the key when deciding where to relocate is actually stability.
他应该选择一个能够这个长治久安，能够这个稳定挖矿、稳定经营的一个地方去。那比如说像政策法规相对透明。那么像一些这个社会相对友好的。
Over in Iran, crypto is being used for trade. Iran is now allowing its banks to use locally minted bitcoins to pay for imported goods. It's a rare case of a country's central bank being pro-crypto at a time when many others are considering CBDCs. But for oil-rich Iran looking for customers perhaps outside sanctions zones, it makes sense. We spoke to Stanley Chow, author of Selling to China, a guide for small and medium-sized businesses, who says this accelerates disruption in the dominance of the U.S. dollar.
It's going to allow Iran to buy materials that it dearly needs, raw materials, and more importantly, it's going to allow it to sell its oil. And it doesn't have to use the US dollar. It doesn't have to use the SWIFT system. Thereby, the US cannot monitor any transactions.
Bear in mind, Iran's friend in the East is China. They've signed a 25-year deal for a strategic partnership. China and Iran together challenging the US dollar with ECNY and now Bitcoin. All right, let's take a look at the markets now. Bitcoin traded around the $54,000 mark, 4 p.m. local Hong Kong time. It's down 0.45% compared to yesterday. And just how are other cryptocurrencies doing? Well, at the close of Asia's market day today, Ethereum was up 2.5%. It touched an all-time high earlier after news that the European Investment Bank may launch a digital bond sale using the Ethereum network. Stocks inched slightly higher in Asia's equity markets. Most indices ended positive by 4 p.m. local Hong Kong time. And that's the daily forecast from our vantage point right here in Asia. For more, visit our website, forecast.news. I'm Angie Lau, Editor-in-Chief of Forecast News. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, time to check in on Bitcoin. TradeBlock's indexes are now the CoinDesk indexes. The CoinDesk Bitcoin price XBX index currently trading at about 54,844. Bitcoin is kind of trading flat right now, down about 15 basis points. And taking a look at the CoinDesk Ether price ETX index right now at 26.99. ETH is doing pretty well over the past 24 hours, up about 5.5%. And DeFi protocol MKR is trading right now at, let's see, about 4,337. It's down about 2.1% over the past 24 hours. MKR is the native token of MakerDAO, the original protocol that helped launch the decentralized finance boom. So over the past few days, MKR has been soaring past $4,000 amid news that MakerDAO is bridging real estate with the blockchain world. Joining us now to discuss is Sébastien Derivaux, head of real-world finance at MakerDAO. Welcome, Sébastien.
Yeah, thanks for having me. Happy to discuss MakerDAO.
Absolutely. So MakerDAO is a decentralized autonomous organization. It's composed of a community that makes democratic decisions on how the protocol evolves. It has been criticized as being slow, and it suffered big losses during crypto winter. So if you could talk about the struggle, what lessons have been learned, and what's behind this latest price surge?
Yeah, sure. So last year we had an issue with big liquidations. And it was DAI holders, the stablecoin, didn't lose anything, but we lost some, I think it was about $5 million of equity. And we have to raise some cash by selling MKR tokens. We have learned a lot, and we have a new liquidation system in place, that will be in place next week. And just this morning, we had the same issue not the same issue, but there was a small blip its price. So one big vault was liquidated. So it was a bigger liquidation than last year, but we made 1 million just this morning. So that's a good news. And we have a big growth, so it's insane.
We have to step back. Explain in really simple terms how this all works. And this latest news, how can people now put real-world property on the blockchain and borrow against it? How does that work?
Sure. So usually in Maker, you put some collateral, which usually is ETH, and you take some DAIs from it. DAIs is a stablecoin that is $1. And the market is the peg is quite good. So you can always trade one DAI to $1. So until 2 weeks ago, the only option was to put some crypto assets. But now it's possible to put other kind of assets. And the first foray we made was with a partner that is called Centrifuge, that is tokenizing and digitalizing some real-world assets. And we are working with one asset originator, which is called New Silver, that is making a loan to real estates in the US. And so since 2 weeks ago, we have financed, I think it was about 4 houses in the US. For a little bit at $500,000. It's still small, but it will grow.
And why would somebody do this? Why would somebody want to link real estate to DeFi? I mean, what are the advantages?
Okay, for New Silver, the advantage is that we are cheaper than other companies because we have one need is that we want to be diversified in our collateral. Currently, we have mainly crypto assets as collateral. So if there is a big drop in the crypto price, maybe there could be a problem. Probably not, but let's say it's possible. So by using real-world assets as well, we stabilize the safety of the protocol, which is a benefit for everyone. So the customers, in this case, New Silver, is getting cheaper access to capital. And the DAI holders are getting more safety because they have more diversification in the Maker holdings. And our investors, the MKR token holders, get more safety and more fees as well. So it's a win for everyone.
So, Sébastien, in this situation, the loans are made to properties that have no other loans outstanding. In real estate, usually when somebody does a mortgage, it's possible to take more than one mortgage. It would be a second or third mortgage on a property. Are these first mortgage or are they second mortgage? What kind of situation would they be?
Yeah, sure. It's a first mortgage. And actually, we don't lend directly against one loan. All the loans are put inside an SPV in the real world. It's just like an RMBS. We take all the loans that are put in a legal entity, Delaware SPV. And once the financing of this SPV is through a loan that is securitized in ERC20 form, so the token on the blockchain, and we are financing this token, which is financing the SPV, which is financing the real estate.
So, but somebody who, for instance, wants to get a loan using DAI or using this method, how would they go about it? They would first have to contact. Who would they contact to? Would they do it on their own, for instance, or?
No, the customer, that the end user doesn't know that Maker exists, and it doesn't have to. We don't have a retail product yet for that. We are a B2B, and our partner is New Silver, which is a lender for properties. And the customers of New Silver doesn't need to know that in the back somewhere there is some DAI, some Maker protocol, some DeFi, and they don't need to know about it.
All right, Sébastien, thank you so much for explaining to us a bit about the DeFi and real estate market and how that connects. Very fascinating stuff.
Thanks.
All right, that was Sébastien Derivaux, head of real-world finance at MakerDAO. Time to check in with global policy and regulation managing editor Nick Day. Hello there, Nick. So the Fed is having a meeting this week. What can we expect to hear out of Federal Reserve Chair Jerome Powell?
Hey, yeah. So Jerome Powell is going to basically be trying to say, yes, inflation might be happening, but also warn, or also try and indicate that it's not a concern, that it's not run away, it's not a big deal. We've spoken in the past. Fed Chair Powell's kind of he's indicated at previous meetings that they want to see inflation rise a little bit. The trick is trying to demonstrate that he has control over it, that it's not going to go out of control.
Nick, you reported yesterday. Oh, sorry. Go on, Nick.
No, I was going to say, do you think he'll mention anything about proposed spending, such as tonight President Biden's additional proposals?
I haven't seen anything on that to suggest he will, but he will be speaking, I think, just a few hours before Biden unveils his plan and, addresses the last 100 days of his presidency. So would not be, a complete surprise.
Nick, just real quick, there was some interesting news from Square. What is it and what does it signify?
Yeah, so yesterday Square hired a former U.S. Chamber of Commerce policy executive as their new Cash App Bitcoin policy lead. That's Julie Stitzel. She is going to be leading Cash App's Bitcoin policy. She's got a very interesting history as far as companies go. She actually worked at the U.S. Chamber's Center for Competitive Markets and has represented the industry association in front of Capitol Hill, which, if she's going to be doing more of that at Square, it could signify that Square's, looking to get a little bit more involved on this policy conversation side, which, of course, we saw another hint of that when they joined the new Crypto Council for Innovation a couple of weeks ago.
All right. Great update. Thanks so much for joining us, Nick.
Thank you.
Right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And that's it for First Mover. Thank you, Emily Parker, as well as Lewitinn for joining me. Up next is Coin Toss at 10:30. You're watching CoinDesk TV.